Hello everyone, it's your host the Cowboy here. Welcome to Bitcoin and Ethereum Elliott Wave Analysis episode 23. And welcome and I'm glad to have you. Let's kind of get going and see where things kind of stand this morning. Elliott Wave Cafe, you can find us on Telegram right here. There is a public chat. There is just an open channel on there as well with the premium room. And then on Twitter, I'm at Elliott Cafe. For regular posts and comments, you can find me in there as well. Let's jump straight onto the charts, guys, and see what things stand. Bitcoin continues to correct a little bit here, and we haven't really made new advancements onto the price. So this kind of continues to push us in this possible fourth wave primary. And the overall cycle trend third, I think, continues to remain in progress, and it's pretty much a valid count. I'm of the opinion that this larger cycle third wave, it's still a little bit short compared with this wave one, and I'm looking a little bit higher, anywhere above 112,000, 120,000. I think it's fair game for the next fifth wave. If it really wants to push a little bit more, we can get all the way up there to about 180,000, where this cycle wave 3 would travel 261.8 multiple of this wave 1. The size of the correction in here starts to be, a little bit significant, but still I think we're in the area of a very kind of normal and appropriate correction compare with anything that we've had, back into the summer of 2020. And this still allows me to put the fourth wave on here. Again, if you wanted to take the cycle third wave and put it up into these levels, things are going to have to be, pretty compressed, because the space that you're going to have for a fourth wave correction in here, it's probably going to be pretty tight. And, I agree the fact that this kind of second cycle wave was more of a directional move and pretty deep in here. In terms of its pullback, this fourth wave by the guideline of alternation can, possibly be a triangle or maybe more of a complex that can continue to move sideways. So if the market wants to throw us that curveball and consider that this bullish move is already complete and you're moving into a larger cycle fourth wave, I would have to respect that, obviously, and just kind of go with the count. But I still think that, following such a correction, comparing it with this kind of second wave that took almost a year to unfold, following that, which would take at least another year, right? Let's say that it's already started. Let's just assume that. We don't know yet, but let's just assume that it started. It would take maybe for the rest of the year and maybe even into the beginning of the next year, and only then you will start the larger fifth wave advance in here to complete a much larger structure. So we're still very, very early in this process. Again, my primary interpretation is that this fifth wave still has to develop in here, and we would kind of have to get more of a way more excitement into the overall Bitcoin community and into the mainstream media about Bitcoin breaking 100,000 and everybody getting bullish and excited, and a bunch of news and newspapers, and I think that's going to be more characteristic of a finished fifth wave, or us being in that fifth wave move. So let's continue to kind of drop in here a little bit lower to a 2-day chart, and you can argue a little bit on the subdivisions. Again, I'm very, very flexible on this 1, 2, 1, 2. Remains my preferred interpretation, but you can move this wave one primary up into this level. You can have a second in here and then continue to count it that way. It doesn't matter a whole lot. The idea remains that we kind of have to push back up higher here. Now, you can kind of see the count. This fifth wave in here, this kind of fifth wave intermediate, it's a little awkward. I've seen many counts counting it as an ending diagonal. To me, it's not really a preferred count, because it just this impulse here out of this fourth wave intermediate, doesn't look like it's a zigzag, which is a requirement for an ending diagonal. So I'm more inclined to kind of count it as a 1, maybe a smaller 2 in here, 3, some kind of a triangle, 4 in here, and a push up higher in this fifth wave. So but in terms of the right look in here, I think expecting a fourth wave in here continues to make sense. A couple of weeks ago we were looking at this as being a possible flat in an ABC. and then with the move up higher. But with the break below these levels, obviously that count is failed, and we just have to adapt to new data. We don't know exactly what's going to happen. Nobody else does as well. And as new data comes into the price, we have to adjust and just kind of go with the market and respect what it's telling us. And for right now, it tells us that it continues to correct, and we really don't want this correction to get much larger than anything that we had previously in here, because otherwise, again, we would run the risk of this becoming a bigger correction and then a third wave cycle to be placed up into these levels. Or here is the other count that it's very possible, is that this is actually a wave one of these lows, and this is some kind of a triangle, something like that, and this is actually an E wave, and then you're breaking in a 1, 2, 3, 4, and 5, and now you're actually doing a deeper second wave pullback, which develops in 3 waves, or a combination of a zigzag or something. So you're going to go in an A, up in B, and then down in C, and then starts to create more of a let's say a larger correction, a larger second wave. But it doesn't change the fact that Bitcoin will continue to break above these highs and continue its advancement towards 100,000, 200, 300, and so on and so forth to the upside. I'm not of the opinion that this is some kind of a larger fifth wave cycle, and now Bitcoin kind of corrects and pushes all the way back here to 5,000 or below 5,000 in some kind of a much larger decline. I don't think we're there, and fundamentally we're looking at this field to continue to develop and be adopted, and I don't think we have those negatives to our back. Now, sure, the governments can come and say all sorts of things, or we have worries along the way, as it's normal into the adoption cycle of this new field. Jumping down here, to a 6-hour chart, something that I presented into the pro room, and this is kind of the main count that we're going with right now. I mean, we can continue to be flexible with this, right? I'm not ready to necessarily turn bullish on Bitcoin just yet from these levels. I want to see a little bit more of a completion of a pattern than some kind of a confirmation of these lows. But this, if you look at these two squares, they're starting to look very similar. And I've actually placed it, a few days ago when we were just kind of making the sell-off, because the patterns look very similar. So this is just a simple clean zigzag. You have a 5-wave decline in a wave A, then you have an AB with a small ending here in this wave C, and then you push down in a 1, 2, 3, possible fourth wave with another push down higher here in fifth, lower in fifth, and then you were going to get a little bit of a divergence onto the RSI, and then pending a smaller confirmation of these levels, then you can initiate some long positions and see if we're able to take this trend line. Right, this is something I talk daily into our pro room. We look at these smaller time frames. We pay attention to the price action, to the RSI, to what else it's new, what else we know, and we kind of continue to try to position ourselves, without necessarily rushing into these sell-offs. We got to let the market guide us and tell us where we are, and then we have the certain kind of milestones or levels, I should say, right, that we look for to be taken out before you get bullish. So there's no rush. First of all, we kind of have to get above this trend line, and then once we start to break to the top of this channel, then we can be a little bit more comfortable securing a fourth wave up into these levels, and then look for the next leg higher again towards 100,000, right? And if any traders want to wait for the break of this B wave, that's a totally fine approach. And because the moment you kind of break above that starts to give you a confirmation that this was just a 3-wave decline and you're about ready to break to the upside. Sure, again, this kind of pattern can morph, and you can have an ABC. This could become a W, and then you go up here and you can have an X wave. So it's all a matter about reading the price action of these lows and see kind of how it develops. And it's just trying to gain an edge and just read the price as it's progressing here. Taking a look at the moving average, I wanted to kind of talk a little bit about where we are in the sequence you can see, I mean, if you can count this bullish advance in Bitcoin, let's say from the lows in March of last year, and as I was telling my guys into one of the updates, is that this is, we've only had about a year, right, of bullish price action into this, new advance. And if you look at the previous cycles in here, I mean, Bitcoin has been rallying for at least a couple of years before you've had major corrections. So if you look at this, right, that's a kind of a 2-year advance. If you count this one, I mean, even if you consider that it started back into here 2016, at the end of 2016, you still got about 1-2 years of bullish price action. So this would be kind of the shortest bull market that we've had in quite a while. Now, yeah, you can start it back into these levels, right? But I'm looking at the bull after a major correction, which was pretty much this one here, that lasted a whole year. So to me, I think, we're still very, very premature in this, and it's still, I think it still has room to run to the upside and continue to push up there towards those levels to kind of match the previous cycles. All right, so in terms of moving averages, the 21-week moving average right now rests at about 49,000. You can see that it offers support so far. And if you watch the previous bull markets, it's been a very, very good indicator and support of prices on the way down. And we haven't really tested it much into this bull cycle. I mean, you've had a little bit of an approach here, but we haven't actually tagged it. So this is the first kind of tag that we're getting into the 21-week, and it would be, I think it would be unlikely that the thing will give up that easily and then you actually turn fully bearish on here. I mean, you can see the previous bull markets as it's testing it offers support. I mean, it needs to be tested at least several times before it kind of gives up that trend. So, that's not to say that it cannot happen. Sure, I mean, you have a drop into the RSI. One more thing I wanted to show you is the fact that, the RSI here is back near 50. And this is pretty much a very interesting and kind of solid level that you would want to join the uptrend the moment you continue to be, in a kind of a bullish trend, but the RSI drops near the 50. And every time it kind of does that, that's a signal that these are pretty good entry levels for a continuation into the trend. So if you go ahead and study, even in previous markets, in previous cycles, how the RSI comes in, whenever it comes again near the 50 level, it's pretty much a good entry level. So we got to combine that with the counts and with some confirmations, but it's something definitely to watch over there. Now the 50-week moving average is about 26,000. The 200-week it's about 12,000 at the moment. In terms of the 200-day moving average, it sits right now at about 39,000. I've got asked into our room like, hey, what do you think? Should we turn bearish? Should we be concerned about this pullback in here? And I said, well, as long as we stay above the 200-day moving average, I think you wanted to stay with the overall uptrend. The moment you break below that, and markets usually, even if they break below those levels, they usually have a sharp rally pushing again as the investors kind of come in and think they're getting value. They're going to push back up higher after they kind of break through it. If this happens in a kind of a three-wave pattern, then you have kind of your signal that you might be entering into a larger bearish correction or more of a bear market in here. What I've done also, I've placed, so for right now I'm still kind of optimistic and I'm staying with the overall uptrend as long as prices are above this 200-day moving average. What I've also done is I've placed a fib retracement between that March 2020 low and these $62,000 or $63,000 highs. And then I'm looking at these kind of 38%, 50%, and 618 of this entire move. I mean, I have to place this because this is so far the top. So now I know exactly, kind of how much Bitcoin would correct in case it wants to, kind of starts coming all the way up to these levels. So as you've seen, I mean, we've done a major advance, from whatever this was, 4,000 to 64,000, and only 38% of that, it's at about 22,000, right? So it wouldn't be, an earth-shattering move, although it would feel like one, but it would be a total normal correction if the Bitcoin will come all the way up here, right? This would be kind of the first levels where, you would have, a possible let's say, super interest. But I think there's plenty more before that, where we would get more buys. All right, let's take a look also a little bit of the candles. I've kind of expressed my concern in the room and in these videos a couple of weeks ago also about this kind of monthly candle that we're getting into Bitcoin, and it's something that I'm watching because this showed us a big pause into this larger uptrend, and I've talked about the possibility of it being confirmed on a move lower. Right, and that would kind of start to create this extremely bearish pattern that you usually get into charts. Right, the price action kind of tells you in some fashion in here that the buyers are getting exhausted and sellers are stepping in, and if we are closing, let's say this month of May, near the lows here of the month of March, then there's going to be a pretty strong indication that the market could continue to move lower. So we really don't want to see the market kind of close up into these levels for the month of May. If that happens, and then you're starting to get a little bit of more of a confirmation into the month of June, then we can come all the way up here and retest this breakout level. These are the all-time highs from the previous bull market, right, in the end of 2017. So I'm watching how we're going to close in the month of May. This is important. If we're able to kind of get back above it and create more of an indecision candle, I think that's going to be a good sign going forward. And if we take a look here at let me just kind of get off these lines, and okay, here is the weekly candles in here, and some of these important levels here are supposed to kind of hold again just for a continuation higher into the next month. So I'm watching this kind of 43,060 level. That's a pretty major swing that we've had several weeks ago, and then the next major level is this kind of 28,817, and if you watch that, I mean, that's kind of in line with sort of where this 200-day moving average is at the moment, right? That's at about 39 actually, and that's at about 28. So that's about $10,000 drop. So it could be that if we're breaking to that 200, the market would actually flush much lower, and then come back to this kind of $28,000 level and then bounce back above it. So because we don't have a lot of support in the market the moment we break below this 43K. So we're kind of keeping an eye on it, right? It's shorter term, we're below the 50-day moving average, right? So that's more of a kind of directional bearish trend. Shorter term, we have a little bit of a signal from the monthly candles that we need to kind of hold these levels and start to push back up higher here in the next couple of weeks to continue to keep the momentum to the upside. Otherwise, we could be in trouble, but remains to be seen. So the next one in here that I have, it's a continuation of this correlation, let's say, between Bitcoin and the S&P 500. And you can study these charts and even go back several years, and you can see that Bitcoin continues to trade, as a risk asset with the rest of the market. So you can pull out the copper gold ratio, you can pull out anything that's, telling you that we have a risk preference into the markets, and Bitcoin continues to move in sync with those ideas, with those trends. So here it shows you, with slight divergences every once in a while, Bitcoin and S&P 500 are kind of chasing each other. So in here, as the S&P 500 was moving higher, Bitcoin sold off, and then as Bitcoin was correcting a little bit into that B wave, then the S&P 500 sold off aggressively. Now, Bitcoin is kind of stabilizing a little bit, and the S&P 500 pushed higher. So, are we to expect that Bitcoin will turn and follow the S&P 500? It's very possible. Otherwise, the S&P needs to sell back lower. Overall, again, I'm still favoring risk into this markets. I don't want to get too much into this macro discussion. You can check my video from last week, and I'm going to do one next week as well. But I continue to favor risk. I think the Federal Reserve is behind, and it continues to support the markets, and they're not ready to raise interest rates. I think that's a very kind of important aspect to keep in mind, right? That they're there to continue to support the economy, and the money will continue to pour into these risk assets. There is some slight signs of inflations and things like that, and there's chatter of them, or at least traders or the investment community talking about, hey, if the 10-year gets above the 2%, and what if the Fed is going to raise rates, and but we're not there. We're not there. So far, we kind of have to watch what they say, and this is, this is kind of the discussions that they're not willing to, taper any of their asset purchases until maybe, who knows, maybe next year or maybe even the following year. But the market will challenge them, and we'll continue to watch that data. But overall, I continue to favor this kind of bullish sentiment into the markets until proven otherwise. Let's take a look at the seasonality in here in Bitcoin. I talked about it a couple of weeks ago as well, and this is, we're pretty much we're supposed to be doing well in this kind of April, May, and June, and then we're starting to drop off a little bit after July and August and September. Those are months that are not as good performers as some of these summer months, and then you're kind of trying to turn bullish again after October, November, December. So you can see in here, right, in the month of May, in about 75% of the times, the month of May was closing higher than it opened, with an average kind of percentage gain of about 20%, and then you're starting to drop in June and in July, and then you're kind of getting worse towards August and September. So if history is any proof in here, we should be possibly turning from these levels and continue to maybe close to a stronger month, but remains to be seen. This is a little bit of a performance of Bitcoin relative to some of the other major asset classes. We watch this every couple of weeks, and I keep an eye on it as well. We were up about 90% before we had this drop. Now we're about 72% to the year on Bitcoin, so continues to be one of the best performers in there. You can throw lumber in there as well, right? Because that's been a crazy trade as well. And then you have copper and some of the other ones. But you got oil in here at about 35%, and then on the last place are you have the bonds, which are the worst performer year to date. And then gold is starting to gain a little bit of ground. Again, if you want to know more about this, just watch that macro video I've done a week ago. But we're still negative, I think, about 3%. And then you have your emerging markets, and then you have your tech sector, the tech stocks, which are, the Qs are up about 4% to the year, and the S&P 500 is up about 12%. Guys, take a short break, have some coffee at Elliott Wave Cafe, subscribe and like this channel if you are happy with this information and with the way we present things and we kind of look at the markets. Please subscribe, tell your friends about it. This kind of helps us rise into the YouTube rankings on there, and more people will watch it, and we'll kind of spread the love around. So yeah, subscribe and like, and let's keep going. The next one in here I have, it's Ethereum. And before I go to Ethereum, I wanted to say, go ahead and check the YouTube channel, right? Go ahead and check. There's a bunch of educational videos on there. There's also there's a couple of videos about stocks. I have some interesting things about IBM and CVS and Ross stores, and some interesting charts that actually broke out ever since we've talked about them. So you can kind of dig to the channel. There's a lot of educational and good information out there. So don't forget to check out the other videos. So again, going back to Ethereum now, it's been a very, very strong performer, and I think continues to be, right? It outperformed Bitcoin for quite a while. We'll get to the Ethereum Bitcoin cross here in a second, but in terms of count, this is a chart that I presented a couple of weeks ago. So you can see here the date is May 1st. And, we were looking at the continuation higher towards this $4,000 level. And if you've seen my presentations since the beginning of the year, 4,000 was one of my targets in Ethereum for this year. And it got reached, in the second quarter, which is pretty fast, which tells me that, we still have, maybe more room to go in Ethereum dollar. Now, we are reaching some interesting levels. There's possibly going to be some pullbacks in here. I'll take a look at the Ethereum Bitcoin cross as well. But, some of these fib zones have gotten hit. So, one of them was this kind of 42,000. So at this 4,200, at this 4,200, you actually have this kind of larger primary third wave travel about 261 multiple of this wave one, right? So a pretty strong advance. Bitcoin has not reached that. That's at about, again, it's about 180,000. So, Ethereum, has reached those levels much, much faster. So, now the question is, are we still in this larger third wave primary, or are we ready to kind of, call a top in here? I must say I'm not ready yet. I think the market has to prove that, and we have to continue to stay bullish again until the market throws some cold shower over those, over this trend. Taking a look here at, the charts that are this current, right? So this one was from May 1st. This is where we are on May 15. That's the breakout, right? And these are these levels kind of getting hit. And I'm still allowing for this larger third wave to be, to be in progress. Again, although we might be near the end of it. Because if you look in here, and if I'm placing the second wave back in here, 161.8 fib of this wave one, it's exactly here at about 4,700. So anywhere between 47 and 5,000, these are, pretty good targets for maybe this larger third wave. Then you can still pull back here in a fourth and then push back up higher in this fifth. So, I'm not ready to throw the towel in. The RSI continues to be pretty bullish in here. If it stays in this kind of black territory right above 70, that's the definition of an uptrend and a strong market. You do have a little bit of a divergence, but, again, I've done a video on divergences, and, you really don't want it to get trapped, into thinking it's a divergence on a bull market, and it's actually not, and it's moving higher. Here is a look at the one-day chart, right? You have a 1-2 in here, 1, 2, 3, 4, and now you're doing another 1, 2, 1, 2. Again, this is from May 1st. All right, so we're a continuation higher in this 3, 4, and 5. And if I'm looking, now at the current price action, you've broken above that trend line, right? So this 1, 2, 1, 2 is kind of correct. Push up higher in this 3, maybe a 4 and a 5th to complete this larger third. So there's a couple of ways in here to count this whole move from these lows to these highs and maybe secure more of a top. You can go very simple, right, in thinking that this is actually a wave 1, this is actually a wave 2, that's a 3, that's some kind of a triangle in 4, and now you're doing a little bit of an extended 5th in here, and you can be completed. So I'm okay with that as well, but the market needs to show me that, and the way you will do it is by creating maybe more of an impulse decline from these levels and continue to sell off. Maybe take these levels around 2,800, 3,000, and then I will be, more likely to secure some kind of a larger top in there, this third wave or this one back into these levels. What I also wanted to show you in here is some alerts from our Trade Alert channel, because besides the daily videos that we do and the regular updates every single day, and the chats and the charts and the stocks and all that we do into the Pro Room, right? We have a Trade Alert channel where we, where I kind of let my subscribers know, what I'm putting my money and what's going on. And this Ethereum trade, based on the Ethereum Bitcoin cross, was giving us a good indication that Bitcoin is about, and based on our counts, right, that once we break above these levels, there is a pretty high chance that we're going to continue to push to the upside. And basically on April 28, we issued this alert. We opened the long, we placed our stops, right? I cautioned that the stops are a little bit large, so you also have to make sure that the positioning that you take is appropriate for the stop size as well. Then we looked at, on May 1st, so a few days later, the markets actually break up higher, so we completely reduced the risk. We raised our stops and created more of a risk-free trade. Then, we took some profits, some partial profits at about 33 to 3,400. We closed about, first we closed 25% of that trade, then we closed an additional 25%, and then we continued to raise stops to kind of see how much longer we can resist and stay into this trade before we were going to get stopped out. And, we move our stop to 3,700. The market pushed up higher into that 43, and then you had that kind of major sell-off last weekend that took us out. But we still made, a very nice percentage gain on this trade for about, almost 40%. So now we're flat on Ethereum, and we're looking for, for the next opportunity. We were also long on Bitcoin, so we got stopped out on that. It's not, not everything. It's bullish and positive trades, right? You do take some stops, but as long as they're a little bit smaller. So our loss on Bitcoin was at about 8 to 9%, as we were trying to, see if we're going to get a breakout out of that fourth wave. But Ethereum far outperformed that trade. So it's, you got to take them and continue to push, right? And you got to make sure your risk rewards are appropriate. Taking a look here at Ethereum kind of longer term on the weekly charts, it's continued to look pretty bullish. I mean, you can look at the RSI. One concern is that we're a little bit far above the 21-week moving average. And I'm sorry, guys, for this video kind of taking longer. We're almost 30 minutes, but I think there's a lot of important information that I wanted to convey today. So I hope you continue to be patient here. So we're above 21-week moving average, and this is a little bit of a concern because I mean, you can continue to push, but eventually that thing will get retested. So we'll see if Bitcoin, if Ethereum will start to rest a little bit here, and maybe wait for this 21-week to continue to to catch up a little bit to the price. But overall, it continues to look good, and it's as bullish as they come. So here is a chart from May 1st and from April 17. I've talked about this a couple of weeks ago, and we were waiting for this breakout, and that was one of the reasons that we chose kind of Ethereum over Bitcoin in terms of trading it more aggressively. And we were waiting for this breakout in the Ethereum Bitcoin cross, and sure enough, a week ago or a few days ago, we had this kind of major breakout, and we're now kind of traveling towards 161.8 multiple of this wave one. And this is kind of telling me, even though the substructure in here, I think still needs to complete a little bit. So maybe we'll get a smaller fourth wave in here, and then a push up higher in this fifth before we correct a little bit in Ethereum. And then, you can get more, you should get a little bit more bullish on Bitcoin once that happens. So that would be at about 0.0920, where these levels would get hit. But overall, we're still in this larger, let's say, intermediate third wave, right? This is just, it would be maybe a fourth wave decline followed by a fifth wave, right, to complete this larger third wave. And then you're still going to get a fourth and a fifth to complete a larger a primary wave one. So overall, this cross can continue to point into Ethereum actually outperforming Bitcoin based on this interpretation from here, right? We're basically just kind of starting, leading diagonal into 1, 2, 1, 2, 3, 4, 5, 4, and 5, and so on. In terms of performance, Ethereum, it's up about 424% year to date, right? So pretty bullish, I must say. They've been kind of tracking each other for a while here, right, since the beginning of the year up to middle of March, and then we've gotten the big breakout here in performance in Bitcoin. And if you look back here, right, there's the Ethereum Bitcoin cross. So you can also trace some trend lines in here, and then continue to favor that on an approach lower. Let's say that if it comes back in here, right, then you're looking for a continuation higher. So you would say, based on this performance, that Bitcoin hasn't done much, but it's been 70% year to date, right? One of the best performers. So it's pretty darn good if you ask me. Now here is a little bit of a look, just a shorter look at the relative rotation graph, right? So this is performance of Bitcoin, performance of Ethereum relative to Bitcoin. So this is a look, again, a couple of weeks ago. And then if you look now, this is kind of what happened, right? So you had this kind of hook, came lower, you lost a little bit of momentum in Ethereum, then you kind of pushed back into this kind of leading quadrant. And, you're continuing to be, in a very, very nice heading, kind of up into the right to this kind of northeastern, heading and look. So, based on this, we have to continue to prefer Ethereum over Bitcoin. And maybe we'll start to lose a little bit of this momentum again as just Ethereum Bitcoin reaches that 161%. But this kind of tells me that this continues to be in favor as well. So here is another, rotation graph when we're looking at Ethereum and Bitcoin relative to the dollar. So this is the dollar index, which is trying to break. If you look back here, it's probably gonna try to challenge those lows, from December, I think, of 2021, right, for the end of the year. We were correcting in here into the dollar index, and now we're coming back towards this $90 level, and we're probably going to start to challenge those lows as well. And as Bitcoin continues to perform, pretty well, right, because everything that's on this to the right of this vertical line, it's a relative strength, and it's a pretty good trending market, but it's losing that momentum, and it's heading in the kind of the wrong direction, I would say, in terms of its momentum and also the relative strength, because it's pushing, kind of southwest in here. But Ethereum, on the other hand, it hooked and is pushing back up higher. So we're having you can see kind of a complete disconnect between these two, as Ethereum is trying to pick momentum and get into the leading versus the US dollar. So we'll continue to watch these guys. This was about it, and please come and visit us into the pro room in here. You have a 7-day free trial. You can see my daily videos, you can see my posts, and kind of what I present on there, and kind of get used. You might like it, you might not. I mean, we're not a day trading service here. We're not jumping in and out of trades all day long. We'll look at a bunch of alts as well. We have suggestions and counts, and I'm adding more alts every single day on there. But this is kind of what takes you to our room directly if you wanted to punch that in, and that takes you to my bot. And then this is kind of what you can get once you get on there. So there's a pro channel, the charts channel, for quick review. So we have 15-20 charts on there, and then there's a trade alerts, the stock channels, the big chat room where we talk all day long about different things. And I have guys that been with me for a year already that know exactly my style, and I know them, and it's a very nice community that we can exchange a lot of good information. And then there's also a course, so not with the 3-month, with the 1-month subscription, you can get a large, I think this is about a 7-hour course that you can go ahead and dive down and study if you want to learn more about the Elliott wave, and kind of get yourself used with what we're talking every single day into those videos. Again, thank you guys for watching. Pretty long video today, about 35 minutes, but don't forget to subscribe and like this video, share it around, and I'll see you again in a couple of weeks. Bye-bye.